All right, welcome back to the trade recap video journal once again. So without further ado, let's just jump right into it. If you're always wondering why this is so orange, we have like an orange light. That's why I'm so orange in bloom. But otherwise, yeah, so today we took one trade on YM, which was a winning trade. And then we had one losing trade on NQ. Basically, it was kind of two trades. It was a re-entry, which still gave us 1 hour on the whole session. So this was the Lucid account. On Lucid, I trade YM, so you can see after commissions we made $552, and then on Mafu we sadly had a $270 loss, which still gives us like $280 profit for the day, so I'm fine with that. As you can see, pretty steep in the drawdown, so half of it on the funded account, but I still think we can turn this thing around and still get some nice payouts hopefully from this account. And then let's jump into the fundamentals for today. Obviously, they were on the economic calendar today was nothing. We just had like, I don't know, I don't even know what this is, Richmond Manufacturing Index. I don't care about that. And then CB, Consumer Confidence. I mean, it's like, it's good to keep in mind, but it wasn't anything big. Then we are still in earnings season somewhat. So today, Home Depot reported earnings before open. So obviously this is traded in the US 30. So it was interesting for me in YM. They reported back positively, which is obviously kind of like a bullish signal for this index. Otherwise, didn't really care about other tickers. Obviously, tomorrow we have Nvidia, but for today, the interesting thing for me was Home Depot on YM. Otherwise, there was no crazy news or something. So let's just jump into the charts. Let's start with YM first. So these were the levels I had for today. So obviously, yesterday we bounced the previous day high. So this was the previous day high from Friday. So on Friday, we formed this high, and then we retested this yesterday. Obviously had a crazy big sell-off regardless, and then we settled at this level right around like the 48,800 and right in between. And obviously at the end of the session from yesterday, we saw a lot of wicks on the 1 hour. This was a level that was heavily retested, and then also during the overnight session, we're still consolidating very much within this range. So for me, the only two trades I was really interested in looking at is that we get a nice close below, also with maybe like a 5-minute opening range that is even below this level, then retest, and then looking for a continuation, or we consolidate it, or we test this level, break above, and then looking for a continuation to the upside to maybe retest previous week low, which is kind of what happened today. So let's just jump right into the charts itself, into the replay mode, so I can tell you what I was seeing. What is interesting before I go into the 1 minute is that I saw that the 48,960 level was something that was heavily retested during the overnight session. So you can see we had a touch point here, a touch point here, then we broke above, retested here, broke down below. So it was just a level that was touched many times during the overnight session. So that was something I was having an eye on. I was thinking of maybe taking a very aggressive break of structure, let's just call it like that, trade, which is also what I took today. So let's jump into the session itself. I think it's a bit more accurate if you go into replay mode than if you always explain everything in hindsight. So when the market opened, obviously price first went down below, retested previous day lows, but we didn't get really like a nice close. I was looking really for something below the 48,770s, which did not happen. So I was like, okay, if we break above strongly, like I really want to see a big bearish engulfing candle, because that's just how US or like YM is moving a lot of the times. I was like, okay, let me take a trade on this. And this is pretty much what happened here. So on the 3rd minute of the open, we had this huge kind of like bearish engulfing candle, even had like a volume imbalance. Like this just showed me, okay, we retested previous day lows. Obviously sellers are being taken out by aggressive buyers. This is whatever you want to call it, a liquidity sweep, a failed auction, you know, it's pretty much kind of all the same thing. And so I was like, let's take an aggressive buy here. Actually, I was pretty early on that. So like I said, I was looking at the 960s, actually already entered around the 948 or something, I believe. So pretty much at the top of this candle, which was risky, but I was pretty confident in this trade. And then afterwards, price moved pretty strong. And here's a good example of why patience sometimes pays out, because you could have just taken a continuation trade instead of a break of structure trade, as price broke to the upside, even took out overnight high, retraced a little bit, so we did like this nice little pullback, closed in the doji. That's like the textbook. So as you can see, we had like two huge bullish green candles. Then the two bearish candles are way smaller in size. You can see the momentum is not the same. It's not like an instant V-shaped recovery or something like that. And that's where you take the very easy trade of entering right at the top of this candle. Stop loss goes below the low of this candle, and then you just write this thing out. But obviously I was kind of in this trade a bit early, so I was already in, so I was already in somewhere here. I had a pretty big stop loss because I was trading smaller size, because I thought like a 50 point stop loss for today would be a little bit too low. So I had like 80 points almost at the low of this candle. So I was like, if this is gonna come back all the way down, even goes below the opening price of the session, I was like, I'm not interested. This trade idea is gonna be invalidated. Obviously, this would have been the safer entry. And I was targeting the psychological level of 49,200. But this is where trade management comes into place. So price was pushing pretty aggressively. So we had like this huge candle, and this is where I lost a bit of like, let's say, confidence. I thought I was good in profit. Obviously, my Lucid account was a bit of drawdown. I was like, I want to like even this out. So I started trading this pretty aggressively, and this is where I technically broke my rules. So I put my stop loss. So I trailed my stop loss here, put it below this candle after the close, then the next candle, or maybe I waited for the next candle to come up. And then what I should have done is just trailed my stop loss below this candle. But what I did is I was like kind of like intra trailing this candle. I was like, I don't want to give away any profit. Then price took me out because it was bouncing back a little bit in this candle. But ultimately, I think within the next candle, we already hit, the 200, which would have yielded, I think it would have been, let me just calculate this. So it was like 75 points, I guess, on YM for three. Yeah, it was another $225 that I left on the table within 1 minute just because it didn't follow the rules in my trade management. But regardless, I was still very happy how this trade played out. And then also I want to show you something that would have been a second trade idea. So I did not take this, but this is something that keeps popping in my mind more often. Is we always say like this one and done trading thing. You just take one trade and you leave the charts. But to be honest, if the market is trading like that, I think it's better to take a second trade on a day like this. And then on other days where the market is just ranging, take no trade whatsoever. Because this one and done mentality kind of forces you to feel like you have to take a trade every single day. So after we traded into the previous week low, which was still the top of this session, we saw that price was kind of halting. It was like not really going anywhere. There was like a lot of indecision. We had this little pop immediately followed by retracement. Let's just give my internet connection some time. And this is what's super interesting about like the 5-minute opening range. So for a lot of people, this would have been like, oh yeah, we failed this level. Like, I don't know, change of character. We're going to look for a trade to the downside. But I'm like, this is a pretty big move, okay? Like we have to rebalance a bit of this price action. So what happened was price actually retraced and perfectly not perfectly, but it tested the 5-minute opening range. So this was the top of it. We see this was like these two huge wicks. This was completely tested by that huge candle. And at this point in my trading strategy, you can look for a continuation trade. It's not that I'm already looking for a trade to the downside. The momentum is still bullish. So at this point, it could have been okay, wait for a close above the 5-minute opening range, which was here. And then we can just look for any kind of continuation. And I think here today it was almost textbook, okay? So retested opening range, came above, almost retested the top of it again. And here you can just look, same as I always do. It's just a very standard pattern. So entry would be at the top of the next candle. If it creates a high, stop loss goes either here or below this candle, which would have been 36 points. And then I think on the next candle, nothing happened. And then here you would have been tagged in. And then, to be honest, the session just continued. Okay, there was another short retracement, but then otherwise price went higher and higher, went into the current daily high almost. And this would have been a beautiful trade if you target like the highs here. would have been also 200 points, almost like a 5.7 hour trade. This is pretty much insane. Just goes to show if you're very patient holding the trade, if it's a good trending day, you can make some very good profits. If you caught the first trade, 4 hour, this one 5 hours, like 10 hour trade in one session, it's just completely bonkers. And then you can just kick up the feet and you're not as stressed taking trades on the other days. So yeah, that was pretty much the YM session. Maybe I can just also hop into Tradeovate to show that I'm not talking out of my butt cheeks. So let's just go, where is this? No, wait, this is from yesterday, I believe. Yep. So here you can see, wait, fills is for some reason turned off. I'm so sorry, because this was the YM. Oh, it doesn't matter. So let me just add this really quick. I have no idea why this disappeared from my chart. So obviously I was trading the minis, not the micros. Here, now you can see it. So this is where I entered pretty aggressively. Like I said, you could have also entered right at the top of this candle. Would have been a bit more, less aggressive, but obviously trade still mattered. This is the candle where I was taking out intra trading, which was not ideal. So I could have just waited for this move as well. And otherwise, this was the continuation trade. And then let's jump into NQ. So NQ had pretty similar levels. You already see marked out 5-minute opening range and 15-minute opening range. Obviously, I did not see that beforehand, but had pretty similar levels. So previous day low, same thing. When we sold off yesterday, we retested these levels heavily. And then for the upside, I did not put in the previous day high because this was like aligning with weekly open, new week opening gap. So these were all pretty visible to me. And then if we go into the session, this was a bit unfortunate. So let's go into replay mode. Right, pretty much the same with YM. Either we break below the previous day low and look for a continuation of the retest of maybe previous week low, or we hold this level, and then I was looking for a trade to the upside. And then, as we all saw, price was selling off in the beginning just for a short time. I believe it was retesting previous day lows. Yep. Before it moved to the upside. And at this point, this was not looking as clean for me on YM because we're still within the 5-minute opening range. So I didn't want to take like an aggressive breakout trade here out of like the opening range itself. So I was like, okay, let's be patient, let this trade play it out. We just push above and then we wait for a retest of the 5-minute opening range. And this is where I kind of like messed up a little bit. So this was where I took my first trade, I believe. So I was waiting for a pullback and then entering on the first new high that is created. Because YM was pushing so strong, I was like, okay, maybe the whole market doesn't want to like halt here and just push very aggressively. So I entered on this candle, put the stop loss somewhere like below the candle. But obviously price wanted to retest even further and was pretty much, I think that was already taken out. And then what it did was retest my 5-minute opening range. And then was the trade I should have taken ideally, but sometimes you never know. So after the retest of the 5-minute opening range, just basic things, you wait for a new high on the next candle. So when we retested here, we had this first candle that is still closing to the upside. And then you can just enter on the new high. Stop loss goes below these candles. So 35-point stop loss. And you could either, for me, so I was like thinking, I don't think we just like go to the current daily high. I think we go to like psychological level of like 2,500 or even more. So that was what I was thinking. I missed that entry, and then I believe, yeah, that's why I got into the trade. So I got into this trade here because if you look at the 5-minute, this was also a 5-minute flag pattern. So crazy huge bullish candles, small retracement or like pullback on the 5-minute. So I was like, okay, if we make a new high on the 5-minute candle, that's where you can go in. So that's where I entered my trade. My stop loss went below the low of this 5-minute candle, because obviously this below this candle would have been a bit too big for me. And then unfortunately, this is where trade management comes into place. It's sometimes best when you enter the trade, don't touch it too much, because I wasn't taken out here. I think I gave it a bit more wiggle room maybe. Oh, this is not correct. So this is 48. Yeah, so it was like 37.50 or something. So barely not stopped out. And I think that's where I lost a bit of like confidence into the trade. So I was like chopping around a bit, went to the 15-minute opening range, came back down, and I was just chopping around. And I believe this is where I was taken out. It was a 17 candle. Yeah. So I started to trail my stop loss, because I was like, yeah, I don't want to give it too much away. I put it always below the low of like the next candles. And then ultimately this candle went below, swiped all these, or like retested this level, took me out for only like $70, and then literally afterwards continued with the move to the upside, went to the 25K pretty much within like 10 minutes or something, went even higher. I think NQ also closed the new week opening gap. So if you were at like a long breath and you were like, okay, I'm really looking for this trade to play out like intraday, you could just held this. But this was not my trade idea, but pretty much, anything for like the 25K would have been hit pretty fast, I believe. So I was taken out at the 17 candle, and only 10 minutes later would have hit take profit with 120 points. I trade 3 minis on NQ, so 6 points. So that would have been a $720 trade, which would have been pretty nice. Pretty much the same thing happened yesterday. I touched the trade way too much, then I reduced my stop loss, got taken out, and then the move happened, which just goes to show that ideally, if you have a trade idea, let it play out, don't touch it too much, and either you're right or you're wrong. But anything you do after you enter the trade, most of the time, is not the best trade management. But yeah, I hope you found some interesting things in this, or how I read the market. If you have any questions, leave them down below. And otherwise, I see you tomorrow.